Well, this year's NCAA basketball tournament is off to a wild bracket-busting start. After the first week of the men's and women's tournaments, there are now 0 perfect brackets remaining. I don't know the last time that happened. Americans are expected to bet over $3 billion during the tournament. That's according to the American Gaming Association. And joining us to discuss is Chad Beynon. He is Macquarie Group Senior Analyst. Chad, it's good to see you. How is this affecting the betting companies' businesses when you see this kind of a sort of disruptive tournament, if you will?
Absolutely. Sure. Thanks for having me, Julie. Yeah, I'd say, look, this is a customer acquisition period, similar to what we saw with the Super Bowl. A lot of states in the U.S. are just still rolling out sports betting. So they're acquiring customers, they're improving their product, they're improving their tech. There's a lot of promotions out there, and that's what we saw during the Super Bowl. It's also what we're seeing during March Madness. From an actual revenue standpoint, looking at the outcomes from the first 2 rounds, the sports betting companies are winning. Traditionally, the consumer has these multi-game parlays, and they usually pick the favorites. And what we've seen so far is the underdogs are 10-6 versus the favorites. And as you mentioned, there's no perfect bracket. So I think at this point, the sports betting companies have a little bit of an edge through the weekend.
Chad, why do these companies continue to lose massive amounts of money every quarter?
Sure, I'd say, look, from a stock market cap standpoint, they've certainly fallen into the unprofitable high growth sector. They've been pulled down by the contagion from other software type of areas. In terms of the actual losses, I'd say it's probably threefold. One, the startup costs are expensive. Companies like DraftKings employ over 3,000 people who are improving their product tech. And that is completely separate from the hundreds of millions of dollars they're spending on marketing to acquire customers. The second thing is, from a promotion standpoint, giving people free bets, giving people sign-on bonuses, that is net of your net revenues. So that's not bringing anything to the bottom line. And then I'd say the third thing is, and this is more what we're hearing from the companies, this acquisition period, or these people, are the golden cohort, and companies believe that they will stick around for a very long time. So it's worth it to kind of overspend for the initial period. And then in years 2, 3, 4, 5, that's where you see the margin expansion. Revenues have gone higher than expected, but to your point, EBITDA losses have also gone higher than expected.
So how long are investors going to have to hang out before they can expect some of all of this customer acquisition period to turn into a profitability period?
The fourth quarter of 2023, during football season, football is the biggest sport with these companies in North America. That's expected to be the quarter when most or all of these companies will be profitable. The caveat there is if big states such as Florida, Texas, or California legalize, and then the companies will have to spend, tens, if not hundreds of $1 million marketing in those regions. But the fourth quarter of 23 is what everyone is expecting. There are companies such as Penn National with their Barstool product. They believe they'll be close to profitable in the fourth quarter of 2022. First quarter, so Jan, Feb, March of this year, will definitely be a big loss quarter for everybody. The second quarter will get better, and then we'll kind of progress through that period. And then that's when the companies get scale. We do think that the fact that the market share has really been consolidated amongst 4 companies, that is kind of proving out that scale matters. And at this point, it looks like those companies will turn profitable in 2023.
Chad, you mentioned Penn. Is that model of bolting a sports betting operation onto a content business, is that the holy grail for the industry?
I think it is, Brian. I think this omni-channel approach where you understand the company from a bricks standpoint and also a clicks standpoint, being able to marry that together, being able to give that customer kind of a single view of the wallet, similar to what we've seen in other industries, airlines, hotels, car rentals, et cetera. People don't want thousands of apps. They want to be able to see everything and kind of earn and burn their loyalty points with one company. Penn National says that a customer who plays in retail and online is worth about 6 times more than a company that just does one. So we'll start to see more promotions for like MGM, Caesars, Penn National with the omnichannel presence, where if you lose money online, they'll be able to reward you back at the property.
Chad, I'm curious how you're doing in your bracket and who you have picked to win it all.
I like to stick to the stock standpoint. I didn't have a great weekend, but I haven't lost any of my final four teams, but definitely a lot of X's in the first and second round here.
Hey, Chad, I haven't talked to you since, the last time we had you on to talk some AMC, but, since we last spoke, somebody just bought a mining company. What do you think about this one?
Definitely a surprising view, I think, from all of us in the investment community, spending, $30 million out of the $1.8 billion. I think most of us thought that money that they had on the balance sheet would be used to pay down debt, to pay down some of these deferred rent obligations. The box office industry is off to, a little bit of a recovery here, but even after looking at this weekend's results, we're not really seeing the consistent, performance we'd like to see. In terms of what we think this did, essentially, I guess it kind of hedges against inflation, right? Like, if the AMC business model is impacted by more inflation, or if the stock, for that matter, is impacted by, rising interest rates and stock market valuation compression, I guess gold is an offset. It's completely different than anything they had talked about in the past. They had talked about getting into synergistic areas in the media, in the content side. This is definitely, very different than what we had thought. But as you guys know, Adam Aaron has been able to do things outside of what, we had thought in the past.
Very diplomatic, Chad Beynon. Yeah. Thank you so much for being here. Good to see you. Good luck with your bracket going forward.
Thank you.
Thanks so much.